What's up, guys? Jeff Wybo here, and I am here with my buddy Pearson, and we are in downtown Toronto in an Airbnb.
Yeah.
You can still do Airbnb in Toronto.
Of course.
And you are a business partner of mine on Foundation Capital, but also you are my accountant as well.
Yeah,
one of my accountants.
Right, one of two.
They're the ones missing, mid CPA, but welcome. And I just wanted to have you on the channel. And it's really important, guys. Smash the like button right now if you haven't already, and subscribe to the channel. Yeah. But we're going to give out some good real estate investing and agent advice about accounting. And what would be some of the things a real estate investor should be doing? Should they have an accountant? Should they do it on their own? Why do we need an accountant in our life?
Yeah, for sure. That's a great question, Jeff. And actually, I think it's really important for real estate investors to have an accountant so you can make sure that you're setting up, your systems and processes early on as you start your real estate investing journey to set yourself up for success down the road. So a lot of investors you talk to had started off and rapidly grown, they go back around tax time and they're like, what the heck happened last year? I've had all these paychecks coming in and out of my account, I have all these receipts. What do I do? What can I write off? And now it's time to file taxes and you're gonna potentially be stuck with a big tax bill. So it's important to get an accountant involved very early on so then these are the certain types of write-offs that I should be keeping an eye out for. This is how I should be setting up my structure per se, separate bank accounts for each property, making sure that you're separately tracking the income coming in, the expenses for each property, what you can write off, what you can't, and kind of setting yourself up for success that way. And it's important to have an accountant kind of guide you through that process and help you at least set that foundation as you grow. And the bigger your portfolio gets, that's where the accountant can also come in and be really creative with the corporate structuring, the tax planning. Maybe you want to transition your asset over to a family member or your child and things like that. So it's really important to get that kind of planning done early on.
So you've just reminded me, not all my properties have separate bank accounts.
Yeah. Oh man, come on, Jeff.
I think I'm pretty good. Maybe one doesn't. So this video will motivate myself also to do that. Let me know in the comment section if you guys are doing this or if you need to be doing this as well.
Yeah, for sure.
That is really key. Just so at the end of the year, one of the good things you guys have been having me do, what was it, Expensify?
Yeah, that's a big one.
We'll put the app in the description.
Yep, that's a key one.
Make no money on it, but it's been great. Every time I get an email attachment receipt or something like that, I can forward it to Expensify and it holds it. I think what's it cost, like $7 a month?
Yeah, it's something cheap subscription model, $7, $8.
And then, I still have a bag of those receipts. Yeah. You just take with the app, you take the photos of all the receipts. Yep. And it really it makes a PDF.
Exactly.
Everything for you guys.
And you can just take that one document and send it to your accountant.
And there you go.
There you go. It's easy.
Yeah, because before, the shoebox thing, let me know. You guys still doing the shoebox thing?
Oh man, the
shoebox. You guys love that, right?
That's my favorite thing, man. I'm just looking forward to people coming in with shoe boxes all the time.
Yeah.
Don't do the shoebox, guys.
So yeah, the Expensify app is pretty good for you guys to use. Okay, agents. What's the biggest thing that real estate agents are messing up on?
Okay, yeah. So one thing, I have a lot of new agents approach me all the time when they look to hire me as their accountant is they're finding a lot of times they've just finished their exams, they just signed on with the brokerage, and here you go, you're out on your own. Go start making some money. But what they're not really given too much guidance on is how the HST portion works, right? And the brokerage, funny enough, purposefully doesn't give them too much guidance because they don't want to be on the hook for any sort of liability giving them the wrong advice. So they tell you go speak to an accountant. So agents, the way HST works is on all of your sales and commissions, there's a 13% charge on that revenue, which is HST. That money does not belong to you. That is to be remitted to the government. So what I recommend you do is take that money, keep it in a separate bank account and store it there for when tax season comes around and when your HST filing is due. On the other hand, once you've had that money in there, 13% on all the expenses that you incur is going to be offset against that cost. So client gifts, meals and entertainment, anything you're incurring as an expense to generate your income, 13% of that gets offset against your sales. So again, if you're a good agent and you're selling more than you're spending, you're going to be making money, and chances are you're going to have an HST balance owing at the end of the year. So it's important to keep that money separate and make sure you have it so you're not stuck with this bill and they put hefty penalties and interests on that amount.
That's one of the things too, when you're a new agent and you get, let's say, a $10,000 paycheck, then plus the HST.
Yep.
it's not easy for us to determine how much we will make in our first year, and how much of that 10,000 will be used for taxes at the end.
Yep.
Any like tips on that, or just save half of it right away? Or?
Yeah, so for sure, like I said, the HST I would tuck away right away, the $1,300. But on the 10K, I would say, yeah, so you don't, especially if it's your first year and you don't have projections or you're not sure what you're going to be having to pay, I'd say,
hard to project.
Yeah, I'd say roughly tuck away about anywhere from 20 to 25% if you're just starting off. And kind of keep that money aside, and just on a quarterly basis is probably the best way to do it. You can either check in with an accountant or find a spreadsheet or a calculator somewhere that gives you a very high level tax calculation on what you may be owing. So 3/4 of the year have gone through and you've made 60 grand. You can kind of punch that into a calculator and see what ballpark you might be ending off at, and that would be gross before write-ups. So if anything, you're doing a conservative estimate where you'll end up owing lower than what you're budgeting for.
It's not easy, and I've been through the first year, because your first paycheck can be 60 days from now, and you might get that 10 grand and you need it for current expenses. Right. And it's really tough to actually do what you're preaching right now.
Yeah, I hear you, man. It takes discipline.
You might want to take that money and spend it on advertisement. Yeah. To produce more business.
Right.
It's real. So maybe like first year agents especially really got to have a business plan. Not just go into it blind. Yeah. Like I did.
So. I agree. And on that point, it's important with that business plan, you can, again, a lot of it's going to be forecasting and budgeting, right? You're thinking, okay, maybe I anticipate I'll do X amount of dollars in deal volume this year. If that were to come in, okay, maybe I took a little bit away for taxes, like I had mentioned, and then you budget, okay, this is my advertising spending budget. This is my budget for, events and sponsorships and the various different activities, kind of having a plan and budget and utilizing that to drive your business. Because again, being a realtor is a business, right? You have income coming in, you have expenses coming out. You can't just be blindly spending like you're shopping. You gotta kind of have those set budgets and targets and chase them that way.
Well, advertisement's always an interesting one for me because it's hard to predict the ROI. Yeah. So you spend, and it could come back, it could be in your first year as an agent, and what you spend in the first month, 2 month, 3 month for advertisement might benefit you 2 years down the road. Right. So hard to then budget this.
Yeah, as well. For sure. And so I guess the other way I would look at it in that case is, with that there wouldn't be a direct ROI in terms of income, but then you would more so budget for a cash flow management perspective, right? So you're budgeting, I have this much coming in, I have this much going out, at least I have this much cash to cover tax bills and things like that. Whereas the net income may not be there, but as long as you have that cash flow there to support the business and continue growing and have a roof over your head, I think that's a good thing to know.
What else you got on the go personally for real estate investing?
Yeah, so right now I'm doing a lot of the Airbnbs. Okay, yeah. So in Toronto, right? Yeah, in Toronto. So I launched my first one I want to say 6-7 months ago, and then now I'm up to 3 with a few partners. So that's been exciting.
Aren't you copying some of my strategies?
Yeah, I know, man. Those masterminds are coming in handy. I gotta say, right? Get the masterminds, guys. It works.
You gotta come out to the events we put on in Southwestern Ontario, because the ideas just come to you, and you guys can all take them and make money.
Exactly.
We're just kind of talking about themed Airbnbs, right?
Yeah, that's a big one too.
You've been doing so you got a concrete jungle in Detroit or
in Toronto, yeah, exactly. So essentially a ton of plants in there, a full plant wall, which is kind of like one of those photo ops.
One like this.
Yeah, exactly.
It's Instagram worthy.
Right, and what we found is with a lot of these themed ones, if you do your research and you look at the data and kind of price it the right way, you can often charge a premium for these, because people, when they're coming down here, not only want a nice place to stay, but they want something that contributes to that experience. So they come in, the experience. People will pay money for the experience.
Awesome. And me and you are closing on some properties. Hopefully this video launches. Yeah. Maybe we already have it closed.
Yeah, I know.
Video comes out, but 17 units we're buying.
Yeah, it's we got the big boy pants on. 17 unit deal. We're really excited about it. It's been a long time in the works, getting the financing and things together, but ball's rolling.
It'll be our easy ones, 17 units now, eventually.
Yeah.
We won't even look at those deals.
Yeah, exactly, right? What else you guys got?
But it's pretty cool for us that we're doing that right now.
For sure.
Yeah, I really appreciate you coming on the channel, giving some of the tips to you guys. How can they find you?
Yep, so you guys can find me on Instagram at PV the CPA. You can reach me via DMs on there. My email address is also on there as well. So via email works.
Followers on Instagram.
It's up the count, guys.
I'll put it in the description. You guys go check it out right now. And really appreciate it. If you guys are new to this channel, hit the subscribe button. A lot of real estate investing tips. And follow me on Instagram as well, at Jeff Wybo. I post there every single day. So make sure you guys get over there. And if you haven't already, smash that like button. And we'll catch you guys on the next video. Bye.
See you later, guys.